with Conrad Ford from Funding Options. I'm Mark from Sage. I'm going to be facilitating this conversation where we're going to be talking about alternative funding, alternative finance. But Conrad, to start, why don't you introduce yourself, who you are and what your company does?
My name is Conrad Ford. I founded and still run a business called Funding Options. So Funding Options is the UK's leading marketplace for business finance. So in other words, we help firms of all shapes and sizes to find alternatives to bank lending. We've been around for a few years. My background actually is in banking, so I came from the dark side. And I'm also a qualified accountant as well, so although not a very good one.
Great. So you mentioned alternatives to banks, but obviously a lot of people, when looking for finance, whether to start a business or to grow their business, will often look to their banks first. So great option, I'm assuming, still for people to do that. But why would you recommend that people go and look beyond their banks?
Yeah, so first and foremost, I mean, the majority, government data shows that the majority of SMEs actually approach their bank first when they're looking for finance. And actually, depressingly, of those that get rejected by their bank, actually the majority just simply give up, which actually is something the government tears their hair out about, actually. But the first point to make is actually that bank finance is a very good form of finance. It's often the cheapest, although we may not believe it, our banks are highly regulated, so they do actually have an obligation to try and do their best for their customers. Although, of course, not everyone gets things right every part of the time. But why a business should look beyond their bank? Well, because some businesses just don't fit bank finance. So you may have a very good business, but it may be that your business is growing too quickly, which is something that the banks actually find quite hard to deal with. It may be that you need money really quickly. The banks are notoriously slow. The kind of comments we get from customers are, going around in circles, tearing my hair out, buried in paperwork. These are the kind of things you hear about banks. Sometimes fairly, sometimes unfairly. But if you need money quickly, that's another reason. But also, probably the main reason for that alternative finance exists is because although the majority of businesses will fit the criteria of a bank, there are lots of difficult specialist circumstances. And the best way to understand that is to think about how the world works if you're a consumer. So let's say you want to get a mortgage on your house and you've been working in the same job for 10 years, you're well paid, you've lived in the country for 10 years at the same address. Well, actually, you're going to go into your bank and you're going to get a mortgage offer on the spot. But let's say that you've just moved into the country or that you're self-employed and things are a bit complicated. Well, generally speaking, you probably need to go to a specialist lender who has a risk appetite or an understanding of the circumstances the banks might not have. Things are really no different for business lending. So if you happen to fall outside those criteria, that's when you need to go to alternatives.
Great, and what are those alternatives? Sounds like banks first is a good first option, but in a number of situations you need to look for alternatives. So what are they?
Yeah, so we're really lucky in this country. I mean, we're perhaps only second to the US, I would suggest, in terms of the range of alternatives that you have as a business owner when you're looking to fund your business. So firstly, we have what are called challenger banks. So these aren't the big high street banks that we all know and love. They may actually specialise in SME lending, and there's actually a high chance you as a business owner haven't actually heard of them. The challenger banks will tend to have a bit more risk appetite, or they'll take a more traditional approach, or they'll look at what they call the story. So for example, if the business has had a county court judgment, they'll look at the story and try and understand whether that was something that was not necessarily the business's fault. Maybe a major customer went under. Whereas banks, generally speaking, the major banks will kind of just give you a black mark and automatically say no. So challenger banks is a major part of the market, maybe the biggest part of the market. Then we have literally hundreds of specialist providers who may specialise in a particular sector or a particular area or a particular stage of business. So a good example there would be a lender may specialise in coffee machines. Now that sounds like a trivial example, but coffee machines are a very difficult asset to finance. So if you want to set up a coffee shop, they'll install that coffee machine that a lender will actually pay for. Well, actually, if your coffee shop goes under, there's not much worth that they can actually resell. It's not a very good form of security for lenders. But actually, some specialist lenders will actually know that if you're a coffee shop and they take out that coffee machine, that's it over for you. So they may not have any value in that coffee machine when things go wrong, but they know you're going to do your very best to pay it back. There's lots of specialist lenders. And then we have something that's a really exciting part of the market and somewhere where we really lead the world in the UK, which is new online lenders. So we have peer-to-peer lenders, where actually thousands of individuals or institutions will actually club together to lend you money online and actually take out the banks from the equation. And also we've got lots of online specialist lenders who will often look at new data sources. So for example, they might tap into your online Sage accounts, so they can make a much faster decision. So for example, let's say you need money really quickly because you've landed a new contract, or you can buy your competitor's stock at half price because they're in trouble. Let's say you've got a great opportunity like that. Good luck going to your bank. Okay? But these lenders, they will actually allow you to open up your bank account data, or your accounting data, or your Amazon or eBay data, and they can give you a decision within minutes.
Wow.
And actually, a real example, we help customers find these lenders. Our record at Funding Options, we had a customer hit our website, and an hour and a half later, there was money in their account from a lender.
Fantastic.
And guess what? I've told my team, heads are going to roll if we don't get there below an hour. So, it's amazing what modern lenders can do.
That's fantastic, and it's really good to know that all of these options exist. Personally, I was only aware of the peer-to-peer that you hear about in the newspaper when somebody crowdfunds a program or a project and they get massive funding. But great to know that there are these options above and beyond the banks in order to achieve growth. But I suppose the next question on from this, great number of options available, alternative ways of securing funding. Why has it grown so rapidly in the last few years?
Well, I think the growth of alternative finance, well, firstly, we have to go then back to the global financial crisis. So there's a lot being written about it and a lot being said, and obviously a lot of controversy in the press and amongst politicians. But what is really unarguable is that there was a period after then when the banks did pull back from lending to small businesses.
Sure.
I would actually say now we're actually, I call it Goldilocks time. Now the banks are very much back in the market. They're not too much in the market and they're not too little in the market. They're kind of where they should be. It's just right.
Just right.
It's just right, exactly, Goldilocks. And actually that's a very good thing because prior to the global financial crisis, they were actually piling too much money into the SME segment. That's actually where it all went wrong. But we have to go back to that point. That was kind of the point in the market, creating an enormous opportunity for new entrants to come in and say, you know what, if you don't want to do this, then we'll do it for you. So that was kind of the genesis of it, although we're some way beyond that point where the banks were kind of out of the market. But there's some underlying factors that mean that alternative finance is here to stay. And I think there's three reasons that I would actually give as to why that's the case. This is not a flash in the pan. The first one is that governments around the world coordinated after the financial crisis to make sure that banks would never actually go under again. And one of the impacts of that is they made it much harder for banks to lend to small businesses because they have to hold far more money in reserve if it goes wrong. And as a result of that, in particular, overdrafts for small businesses here in the UK have been disappearing at a rate of £5 million a day.
Wow.
Okay? So it's like an enormous vacuum taking working capital out of the economy. It's not the bank's fault, but it's one of those things that we as a society needed to make our banks safe. So there's a big gap that's not going to go away, and lots of alternative finance is piled in to actually support that need because they're not banks. So the second one I would talk about is a lot of SMEs, particularly larger ones, so let's say multi-million-pound businesses, turnover businesses, learned a hard lesson during the credit crunch, which is that they've become too reliant on their bank. And immediately afterwards, when they needed more finance, alternative lenders said, look, we're still open for business. And a lot of finance directors and accountants around the country learned an important lesson, which is keep those lenders on your panel. Yeah?
Right.
Don't forget that they were the ones who were there when times got bad. And so that's another factor. And then finally, I would argue that it's increasingly difficult for banks, traditional banks, to serve their small business customers. And the reason for that is because small businesses, a slightly controversial point, small businesses say they want a relationship bank, they want a bank that understands their business, but generally speaking they're not willing to pay for that. If you're paying £5 a month in fees, that only buys so much relationship. So we have this terrible problem actually that small businesses are increasingly difficult for banks. They're finding it increasingly difficult to stay close to those customers. But there's alternative lenders because they don't have the legacy of expensive branches and people with ridiculous pension schemes waiting for their redundancy check. Because they don't have all those costs baked in, they can actually still serve those customers and give a proper traditional relationship, which is a fantastic thing.
Absolutely. And I think that that's really a commentary on the world in general today. I think people's expectations of convenience, using technology, the way in which the world is changing to make things much easier for you, whether you are doing things in your personal life or your professional life or even running a business. And so, technology and trends and the world just generally making things easier for people, which ties into why then it's possible for alternative lenders to be more effective in today's space. So is there anything that you see, let's look into the crystal ball a little bit, Are there any trends or technologies that you're starting to see spinning up now that are going to have a significant impact or shift this even further?
Well, I think something that Sage customers, hopefully we've heard a lot about from Sage, is the importance of the cloud for small businesses. And the statement I make, and this is, I am a SME owner, maybe not a small business owner anymore, but I'm still a business owner, and I've been through that difficult time. The cloud is an amazing tool for small businesses. It's phenomenal. And the way to think about this is, if you go back 20 years, you had large enterprises, large banks, large shops. They started using modern tech, what we now think is modern technology, whether it's customer relationship management or online accounting systems. They started using these systems, and they had an enormous competitive advantage. And there was this constant, relentless, destruction of small businesses by these big legacy players. Well, the great news is those tools are now available for small businesses off the shelf.
Absolutely.
And paying X pounds a month per user. And the great thing is those big lumbering organisations, exactly because they got ahead of the game 20 years ago, are now encumbered with stuff that's looking really old and obsolete. Okay? So we have a customer relationship management software that is absolutely world class, and it costs pounds per month per user. And actually, compared to organisations that are still figuring out whether to replace that thing they put in 20 years ago, guess what? We have a huge competitive advantage. So the cloud is an absolute game changer, and I would personally argue that it's actually put SMEs on the front foot and actually put large organisations on the back foot. So let's give a real example. It used to be that if you're a business and you were thinking about trading internationally, exporting, so you would perhaps start up a branch, and then you'd come to dominate over 30 years, you'd come to dominate your region, then you'd become a national player over 50 years, and then you say, right, time for France. Okay? These days we have what's called a micro multinational. These are businesses, you may be a shop, okay, and you may start just a physical shop, you might occasionally start selling stuff online through Amazon. And then one day you suddenly realise you can sell to consumers around the world through Amazon. And suddenly you're an exporting business, and you've still got a tiny turnover. So that incredible ability to ramp things up really, really quickly is what's so potent about the cloud. So I think that's a formidable technology. It impacts directly on business lending and business finance. I've kind of alluded already, there are some lenders out there that are now tapping directly into your accounting system, directly into your Sage accounts. Because fundamentally, when they're deciding whether to lend to you, they could either take a printout of your profit and loss, which is probably done by your accountant 9 months ago, and guess what, they're not quite sure whether they can believe that anyway, especially if it's not been audited. Or they can go deep into the raw data electronically within seconds. What would you rather do? So these new cloud technologies are changing everything, particularly, and business lending is just one phenomenon. So that's one thing. The other thing, which I think business owners probably far less likely to know about, is something called open banking. And what open banking is from January next year, so we're talking like less than 6 months now, amazingly, your bank will be obliged, if you decide, to actually let other institutions to actually look at your bank account data. There are lots and lots of use cases, ways this might happen. But for example, if you want somebody else to lend to you that's not your bank, you'll be able to give authorization for that lender to actually look at your bank account data and make a fast, valid decision whether to lend to you. So open banking is a new thing that's coming. You're going to start hearing about it very, very soon because it's imminent and it will change financial services.
Wow, incredible stuff. And what about the buzzword at the moment, AI and machine learning? Do you see that playing a role in some way, or is there still the need for sort of the higher human intervention?
I'm actually experimenting as we speak, so I'm speaking from the coalface, but with all the caveats of what that means. And so we're beginning to experiment with it. So we now have a growing universe of data about our customers. Tens of thousands of small businesses will come to us each year for help with finance. We have a growing universe of understanding, so we're trying to actually use this stuff. I would say it's very, very early days, I think it's a very good example. Somebody gave a tweet that I can't do justice to. I'm going to describe it, but they managed to do this in 140 characters. They essentially said, they go to a Wired conference and it says AI will change the world. Then they go to Amazon and it says, it looks like you bought a wallet. Would you like to buy a wallet? I think the difference between what AI could do and where we are right now is quite fundamental. As a business, we're what's called a fintech business. We're a combination of finance and technology, and our job is to try and actually push the boundaries of ease and convenience for our customers. With what's capable of modern technology. For us, that's something that we're thinking about over a 3 to 5 year timeline, but we're beginning to have a go.
Excellent. Yeah, I think it's very exciting times with particularly machine learning, AI, not just within fintech, but within the broader world. As consumers and as people living in this space, I think our lives are going to significantly change as the AI becomes more sophisticated and as we stop getting the retargeted ads of the product you've just bought.
Yeah, well, I think there's an amazing expression, I think it's attributed to Bill Gates of Microsoft. And he said people overestimate the impact of a new technology in a 2-year time frame, but they underestimate in a 10-year time frame. And I think that's absolutely where we are with AI and many other technologies. In the first 2 years, you get all the negative articles about being a damp squib, etc., etc., and then suddenly the world's changed. You didn't realise it. I'm often asked about this kind of stuff, and what I say is, if you said to me or to you 10 years ago, you're going to get in a stranger's car at 2 in the morning because your phone told you to, you would have thought they were ridiculous. But now we all use Uber. And if somebody had told you that you'd let a complete stranger stay in your spare room because your phone told you to, you would have said ridiculous. But we all use Airbnb now. Yeah. So we all underestimate how much in a 10-year time frame we can change our minds about stuff.
Absolutely. Well, I'm very excited to see what changes within the world of finance and lending with all these advents. Let's step back from the future and back to today, and let's talk a bit about working capital and maybe some tips for the people watching as to how to leverage their working capital better in order to achieve growth for their business.
Yeah, so I mentioned earlier that one of the great challenges we have in the economy at the moment is that banks are finding it harder and harder to give overdrafts. So it used to be quite normal for a business to kind of have this tap in the background of, if they need a bit more cash. And that cash, of course, is working capital. And working capital needs can be driven by either success or failure. So it may be that a customer pays you really, really late or doesn't pay you at all. That's a terrible, terrible thing to happen to your business. And it may equally be that you're growing really quickly, which means you're stocking up or you're hiring up, but actually the cash is taking time to come into account. Both of these drive working capital needs, and the traditional way of actually supporting that of bank overdrafts is not what it used to be, and that's not coming back. That's not a criticism of the bank, it's not their fault. Well, actually, the important thing to understand is there's multiple ways to actually replace that working capital to support your growth or to get you through a difficult patch. So, for example, if you regularly trade on credit, in other words, you raise invoices and people pay you 60 days or 90 days later, you can actually get those invoices, the majority of those invoices paid instantly with a product called invoice finance. That's a great way of funding working capital. But equally, there's more and more short-term lending providers that will just give you a short, sharp loan as and when you need it. There's lots and lots of alternatives. The important thing is to stay on top of your cash flow, because unless you're really, really lucky, if you haven't got some idea that a working capital need is arising in the future, then you can get caught out and that can kill your business. There is a phenomenon called overtrading where success kills your business because you're growing so quickly that you're buying stock before you sell it, or you're doing work before you get paid to it, and then one day you suddenly realise you're out of cash and there's not enough time. It's really important to use tools like Sage to actually constantly take a look at your cash flow. Cash is king for a reason. Cash is king because it's the one thing that can kill your business.
Yeah. I think that's great advice, and absolutely critical for people. And I think we're preaching to the choir somewhat.
Yeah, but you know what? I mean, so I'm an ex-banker and I'm a qualified accountant, but I've been in situations where I've been caught out. The simple reality is, it's cash flow is one of those things it's important, but it's never quite urgent enough that you sit down and do it. You've got a new customer, or you've got a priority, or somebody you've got to go back to. And actually, I've been caught out. So let's be clear here. Do as I say, not necessarily as I do. It's very, very hard to maintain that discipline. And if your business is doing okay, but you keep getting caught out, that's probably a sign you should get an accountant.
Absolutely. So let's talk a bit as we come to a close here. But I think it's very clear. You've got a wealth of experience and knowledge, and obviously you transfer that into your own business, so funding options. I think it'd be great to hear a little bit more about what your business can offer to some of the small businesses and small business owners that are watching this.
So, I mean, just to give an idea of where I came up with the idea of funding options 5 years or so ago, I guess. So essentially, the question I was asking myself is, why is it, if you want to get insurance to go for a week in Mallorca, and you just go online, you can instantly get some quotes. Why isn't that available if you're a business that needs a loan for your business? Well, I now know 5 years later that it's because it's very, very hard. It's very, very hard to do. It's a very, very complicated market, but fundamentally, Our market is one that really is crying out for somebody to take what's a really complex and actually very jargon-filled market and actually try and make it as simple and easy and fast to navigate for small business owners as possible. And if I was going to give an analogy, you go back to when I left university a long time ago now, every high street would have had half a dozen travel agents. Well, very few of them have them now. And the reason for that is because consumers came to actually find that they could actually see more of the market with far more transparency if they went online with websites that came up to solve that problem. Well, I wanted to do the same thing for business lending, and we're on a really exciting journey. We hold a number of records in the market in terms of size and speed, etc. And we're growing very, very quickly, but our job is to make it easier for customers to find the right finance.
Excellent. Well, no, that's great, and I think very admirable as well. I'm not sure if we've had any questions or comments come through, but we have unfortunately run out of time. But Conrad, thank you very much for coming in and for talking. I'm sure there will be people submitting questions afterwards, and we can make sure that we answer those.
I'll be very happy to answer any questions if I can.
Great. Well, thank you very much, Conrad.
Thank you.
Thank you.